Hey everybody, my name is Brandon from thestocksnews.com, and today I want to talk about Alibaba stock, ticker symbol BABA, and how it is down over 55% in the past year. So now let's get started. So here we are in Google, and here's a 1-year view of Alibaba stock chart here, and we can see Alibaba didn't do well, off more than 55% in the past year. Now when we look at a 6-month view, we can see that we're still not doing too much better, down over 33% in the last 6 months, and if we look at the 1-month view here, we can see that we have dropped more than 6%. Obviously, this is due to government regulation from the Chinese cracking down on their own technology companies in their attempts to break up what they see as monopolies. There are many reasons for the crackdown. One reason could be that maybe some of these companies were getting China's youth addicted to video games, or another reason may be that these companies just got too powerful. Probably nobody knows a true answer to why these crackdowns are happening besides the high officials in the Chinese government, but in any case, these regulations are definitely harming Chinese businesses such as Alibaba, and that of course is affecting the stock price. However, since the massive wave of tech regulation last year in China, there are some journalists that suggest that the worst of the tech regulations may be over. We can see here from Evelyn Cheng, the author of this February 10th article, that she and other economists think that China wants to protect a sustainable and stable continual growth rate of about 5% year on year. So while this may sound like a good thing for investors and Alibaba bulls, saying that the worst is behind us is not the same as saying that there will be no more regulation. This point is clarified here in this February 17th article by the same author from the previous February 10th article. Again, for investors, the large macroeconomic risk for investors is continuing regulation by the government. The risk that investors hold is that the worst of the China's regulation are in the future, not the past. So with all that said, I actually just want to go back into Google really quickly to talk about some numbers that I want to keep in your head before looking at the earnings report. Back in Google here, we can see that Alibaba's total market cap is around 300 billion United States dollars, and the PE ratio, the price to earnings ratio, is around a 28. This 28 price to earnings multiple is actually a little expensive compared to the S&P 500, and is a PE ratio that is similar to a growth stock. But now let's head on over to Alibaba's earnings report to see if Alibaba is actually growing at a growth stock pace. So here we are in Alibaba's earnings report for the quarter ending on December 31st, 2021, shown in these two columns here, and we'll focus on this column here, which is the local currency, the renminbi, because that is what is reported in the year-over-year view with 2020, which is shown in this column over here. We can also see that they give us a 9-month view for the previous 9 months ending on December 31st for both 2020 and 2021. So first things first here, let's look at top line revenues. We can see that revenues are growing about 10% year over year from 220 billion RMB in 2020 to the 240 billion RMB in 2021. However, if we take a look at the next line here, the cost of revenues, we can see that Alibaba's cost of revenues are increasing more than 10% from 2020 to 2021. Now, this is not really a good sign, as that's suggesting that the gross profit margins for the business are actually decreasing for Alibaba. However, moving on here, we can actually see that that is not the only cost that is increasing for Alibaba. In our operating expenses, which is this block on the earnings report here, we can take a look at the sales and marketing expenses over here, and we can see what an increase from the 25 billion RMB in 2020 to the 36 billion RMB in 2021. That is a massive increase in spending, and the whole point of the spending is to drive growth. That is why you spend money on advertising and marketing your products, is to drive growth. However, if we remember our revenues growth rate here, we only grew revenues by about 10% year on year. So it's up to investors if they think that this extra spending in sales and marketing is worth it, but in my opinion, I'm not so sure. Lastly here, let's talk about this massive expense in impairment of goodwill. We can see in 2021, we spent over 25 billion renminbi in impairment of goodwill. You can read more about goodwill in this Investopedia article here, but essentially, if a company buys an asset at a purchase price and now the asset is below that purchase price, the difference between the purchase price and the lower asset price can be reported as an impairment to goodwill. If we look at page 1 of Alibaba's earnings report, they do note that this impairment is due to the digital media and entertainment business, which likely includes video game-like assets. while this line is not necessarily making a statement on the unit economics of Alibaba or how the business is being run, it is definitely something to be aware of, because at the end of the day, it does impact income from operations, which is this line on the earnings report here, and of course the net income, which is this line on the earnings report here. And if we take a look at the net income year over year, we can see a dramatic and dismal performance from the 77 billion RMB that we made in 2020 to the 20 billion RMB we made in 2021. We can see that this dismal performance continues in the 9-month view, where we are decreasing our net income from about 151 billion RMB for the 9 months of 2020, decreasing by more than 50% to about 65 billion RMB in 2021. At the end of the day, what this means for shareholders and for investors, it means that Alibaba is in a rough spot at the moment. Its earnings have decreased significantly, meaning that they have less money to give back to shareholders. Alibaba is also in the crosshairs of regulators. However, Alibaba also has name recognition and a multitude of different businesses that generate revenues, such as cloud computing or supply chain management solutions. While there are a lot of government regulatory headwinds which are likely hindering Alibaba's fundamentals at the moment, investors should consider how the company will be positioned in the long term. Investors need to decide if Chinese regulators really want to bring Alibaba to the ground, or if this is just short-term chop. So with all that said, now let's head on over to Alibaba's trading charts to see if there's a level or two to buy Alibaba if we want to buy Alibaba. So here we are in Alibaba stock charts here, and what a strong downtrend we have been seeing since our all-time highs here back in October of 2020. Since then, we've been making lower highs and lower lows, and this trend looks incredibly powerful. If we zoom on in here to where we are today, we can see that we have been making a short-term base around the $110 level for the past few months. However, if we look just a couple days ago, we can see that after our earnings report, we did drop below all the way down to $100, breaking that $110 support level up here. We can see that we ended the day right at the support level, and yesterday we were unable to breach that support level. That, in combination with the macro story of geopolitical risk and rising interest rates, can accelerate our downwards trend momentum. And if I wanted to expand a position in Alibaba, I would actually be waiting for Alibaba to drop back to the lows that we saw after the earnings report release around the $100 level here. However, what I would like to see Alibaba do is actually wave out here around this $110 to $125 range. I would want to see Alibaba form a stronger base before putting any more money to work. If we revisit the lows of $100, that could signal a continuation of the downtrend. Because of the strong downtrend and risks, I think an investor could consider an option strategy to hedge their risks in this name, or they can choose the many other different types of companies in the S&P 500 to play with other than Alibaba. Looking at the MACD and RSI here, we can see that the MACD short-term momentum line, which is the blue line here, is weaker than our orange line here, long-term momentum, and this is a bearish sign. If we look at the RSI chart here, we can see that our RSI looks close to touching the oversold territory, which is below this 30 line here. If it does touch the oversold territory, then that could be a sign that Alibaba may be oversold in the near term, which could present a short-term trading opportunity. So that was my review on Alibaba stock. Let me know what you thought about it in the comment section down below. If you have any questions or if you got any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching, and I hope you have a great day.